Hey guys, welcome to Lumovest. If you've been reading about investing, chances are you've heard people throwing around the word dividends. In this video, we'll explain what a dividend is. If you haven't yet, subscribe to our YouTube channel so you get all our videos helping you become a sophisticated investor. A dividend is a distribution of a company's earnings to its shareholders. It's one way investors make money from stocks. Most companies make this distribution through cash payments that they deposit into the shareholders' brokerage or bank accounts. However, in some instances, some companies may distribute dividends through stocks instead of cash payments. Basically, the company giving you extra shares instead of cash. But if you really want the cash, you can just sell the stocks the company gave you and you'll get the cash. So either way, dividends are really just distributions of the company's earnings to their shareholders. They do this because the shareholders are the owners. They're entitled to the corporate profits. The more money the businesses make, the more they can pay out to their shareholders. Think of Apple, for example. Apple makes money by selling its iPhones, iPads, iWatches, and tons of other products. The cash it receives from these sales will be used to pay for its expenses and reinvestments into the business. But whatever left over, Apple can give back to its shareholders. So if you own shares in Apple, the more products Apple sells, the more money it makes, and the more dividends it can pay you. That means while you're going about your day, and even while you're sleeping, the companies that you invested in are working hard on the side to make you money that they can give you in the form of dividends. The amount of dividend that each share is entitled to is known as dividends per share. You can find this information usually on the company websites. Not all public companies pay dividends. Some companies aren't profitable, so they can't afford to pay dividends. Other companies have better ways to spend the cash than giving it back to investors, like reinvesting into the business or repaying debt. We explain this in greater detail on our Lumovest website. But the public companies that do pay dividends usually pay it multiple times in a year. In the United States, public companies pay dividends on a quarterly basis, meaning every 3 months. So if you own 1,000 shares of a stock that pays $1 per share each quarter, you'll get $1,000 of dividends every 3 months or $4,000 a year. European companies often pay dividends semi-annually, or twice a year. And sometimes, companies could just lump everything together and make one large dividend payment a year. So that's what a dividend is. If you want us to make follow-up videos showing you how to analyze dividends for stocks, hit that like button. Hope you guys found this helpful, and remember to subscribe. See you next time.